Yo, what is up, guys? Welcome to the Tony and Dakota podcast. Today,
What's up?
we have a very special guest, and Tony's going to introduce him.
This is CPA Dan Hodges, Daniel Hodges. He owns Warrior. See, you guys go by two different names.
Warrior Business Services.
Warrior Business Services.
Yep.
And he's going to be talking to us today about all the things that I do unprofessionally and to stop doing as far as legal work and also taxes. He's an awesome accountant. We ended up switching to him. And Colby, who's over here in the corner of the room, you can't see him, making sure that Dan doesn't say anything he's not supposed to say, or we don't include anything in the podcast we're not supposed to. But he's been fantastic ever since we switched over. We actually know that our books are right, and tax accountants are really expensive, but they're worth it. And we're going to talk about why, especially because when you're in real estate, there's so many benefits and so many ways to give Uncle Sam less money. So this is CPA Dan Hodges.
Yeah.
Thanks for coming on.
Yeah.
Thank you guys for hosting me. I've been a longtime follower. You're on every channel I think there is now. I love I love what you're doing with this, and I believe in you guys.
Thank you.
Thanks. You had said before, don't just there's something like a tax accountant and then there's a CPA, and they're different.
Yes.
And you need to know the difference. What is a CPA?
Well, okay. Probably a good way for me to come at that is talk about accountants, okay? And tax preparers. Anybody in the world could do tax preparation. And be careful, Tony. Don't get this in your head. Like you should not be doing taxes. But if
Starting a new business.
If things get slow, you could probably do taxes. I'm not sure there's a lot that would stop you from doing that. Is that am I on the right track? Yeah, I don't think there's much that would stop you from doing taxes. Now, whether you should be or shouldn't be, it's another issue. Taxes are complex. I mean, I'm going to get into in a second here. I don't know how long I have to talk about
You have
this.
as much time as you need.
All right. So just about anyone could be a tax preparer. And if you go to one of these, I'm going to try and use a generic name, a tax window shop. Mm-hmm. I'm not saying
H&R Block, you're not saying that?
No. If you go to a tax window shop, sometimes their people are a little bit better than someone that just want to start doing taxes because they go to a training course that I've sent people to that training course before because it can be good to get some basic knowledge. It's a few weeks to a month, and then you can start doing taxes. Now, I'm going to try and compare and contrast that for a second. You also have degreed accountants. And a degreed accountant would be someone who went to college and they studied accounting and taxes. And if you think about college degrees, there are a couple different levels, right? There's a 2-year degree, which is called an associate's. Mm-hmm. So I've hired a lot of associate's degreed accountants, and they're knowledgeable, probably on the accounting side more than on the tax side. Mm-hmm. And those two run together, but they're separate, okay? So you could get an associate's degree in accounting, and you would be a degreed accountant. You could also get a 4-year degree in accounting, which would make you a bachelor's degreed accountant. Now, then you can go from there. The next level up would be a master's degreed accountant. And then I don't run into them very often. Usually they're college professors. That would be like a PhD, like a doctorate of accounting. Mm-hmm. You don't need that to do what I do. Now, so we have tax preparers, then we have degreed accountants.
Well, then you can't market yourself as a tax doctor. You know?
I mean, I guess you could market yourself as whatever you want, or whether you're qualified or not. Now, so we have tax preparers, we have degreed accountants. Then if you have an accounting degree, you might consider pursuing a credential, which signifies that you not only have the educational background, but you also have passed a test, a national test. And there are a couple recognized designations. When it comes to the tax world, two very commonly recognized designations would be an enrolled agent, EA. That means you passed a test before the IRS. And it's It's overwhelming. It's
Brutal.
Yeah, it's like a 3-part test, and I'm going to be honest, most people can't pass it. Would you say that's true? Yeah.
Are you letting deals fall through the cracks because you don't have good systems in place?
We've been there before, and we've tried several different CRMs, and RE Simply has been the best.
RE Simply tracks your KPIs, does automatic follow-ups for you, and even records your incoming phone calls.
The system is simple to use and has more features than we even know what to do with.
If you're looking for a great CRM, try RE Simply today. We put the link in the description. Check it out now.
And then there's also the Certified Public Accountant, CPA examination. And that one, the pass rate, I want to say it's south of 50%. So if you think about it, to become a CPA, you have to have graduated from high school to get into college. You have to go to college. And to be able to sit for the CPA exam, there is a barrier. You have to have 150 credit hours. So that means you need a bachelor's degree plus an additional length of education, which is almost gets you to a master's degree. You don't have to have a master's degree to be a CPA or to take the CPA exam, but you have to have 150 credit hours.
Manchester College, or now it's Manchester University, they have like a rollover thing, because one of my friends was like, yeah, I could do a 5th year and then I'd be able to get this additional thing, and maybe that's what he was talking about.
Yep, that's what it would be. So the additional year gets you up to 150 credit hours. Once you have 150 credit hours and you've taken enough accounting classes and tax classes, then you are qualified to take the CPA exam. And that's where... You have to have the experience to get that. No, hang on. It's 150 credit hours to take the exam. Now, if you take the exam and you pass it, then to become licensed as a CPA, now these rules vary from state to state to state. Here in Indiana, I think you have to have 2 years of experience under another licensee. All this stuff has changed over time. It used to be 3 years. I think it's now compressed to 2 years. I hope I'm right about that because I don't want to give wrong information out. But I guess the point of all that is to become a CPA, like you have to hit a lot of stops. You have to get a high school degree, get a college degree. You have to have 150 credit hours, the bulk of which has to be in accounting and tax. Then you can sit for the exam that most people fail. If you pass, you then have passed the exam, and then to get licensed, you have to work under another licensee for a length of time, at least 2 years, in some states 3 years. And there might be 1 or 2 states out there that's a year. I don't know. Every state is different, but that's how you become a CPA. Now, once you become a CPA, our bodies of knowledge are in 2 main areas. There's a lot of different things you can do as a CPA, but my expertise is in accounting rules and business taxation. That's where I spent the bulk of my career. 26 years since 1996 in working with family-owned businesses on their accounting and taxation.
Yep. I got a question about that, actually. What is the difference between you and the other tax accountants? Because obviously there's a lot of CPAs out there, and we've been...
And there's a lot of accountants out there who aren't CPAs. 100%.
Yeah, and we've worked with a lot of them. It's
a few of them, yeah.
Yeah, we've worked with, I would consider quite a few. I mean, it's been like 4. So it's been interesting. But I would like to hear from your perspective, what is different and what makes a good one, and what is the opportunities for people who are maybe not so good? Have you been thinking about investing in real estate?
It's not like what you see on HGTV.
We created a course to show you how to really invest and create a profitable flipping and wholesaling business.
We give you marketing strategies like how to pull lists, who we target, and where we find the money.
We go over sales, which includes live calls and negotiations, scripts, role-playing, and so much more.
Everything that you need to know to flip houses is in this course. And if there's anything that we missed, we will create a video to answer your specific question.
This knowledge has made us over $1 million, and we're selling it today for just $997. Click the link below.
Yeah, I would like to talk about what my approach is.
Yeah.
And
I would like to talk about the differences from your approach to other people's as well.
Okay. So, like I say, I've done this since 1996, and I've focused on family-owned businesses. The early part of my career, I worked with a national firm. We had offices around the country. I did a lot of my work here in Indiana, but I also worked with our Chicago office on jobs. I worked with our Cleveland office on jobs. And I flew out to New York for a few times with our corporate offices for some corporate crap. No, it was a good experience. I was really a loyal company guy until my firm decided to pull up stakes and say we're going to close our Indiana operations. And that's when I went self-employed myself. Okay. What I could say about what's different between my approach and other accountants is here's what I think I would say. A lot of accountants are comfortable with, and a lot of business people are comfortable with, and will use a once a year approach. Like just you can be off on your own all year long. Just Tony can be your bookkeeper. That would be good, right? And he can do all your books, and just bring him in next year, and then we'll do your taxes. Early on in my career, I supported people in that capacity. And what would happen is we would go 12 months almost without talking. And then you would bring your box of junk in, or nowadays it's a virtual box of junk. And as the accountants, we would go through and do a year's worth of accounting. And sometimes what business people do is okay. I'm going to be honest, like 80% of the time, it's not real good.
I would say 99% of the time.
It's not real good.
80 is
it's
generous.
something, but honestly, if we have to backtrack and undo things that were done, honestly, my staff will say things like, this just would have been better if we started fresh, like just clean, because we could get it done faster, better, more accurate, and so on. One of the approaches we use is to keep things clean all year long, every month and every week, depending on how much business you're doing. And so for some folks, we try and keep things clean every day. And really what we're doing is not just supporting the accounting and the bookkeeping, but it's basic communication. Because Dakota, if I were to ask you about something that happened, this is the time of year when customarily you would bring your box of 12 months worth of junk in to the accountant, or maybe you'd still be working on it another month or two, right? What would happen in your past life?
Oh, man, I would never remember anything.
But you would spend from now till it's January now, you'd be spending all January, maybe February, maybe into March.
Just stressing.
Getting your stuff together,
stressed
right?
about it. They're like, all right, we need this, we need this, we need this. And then they're like, all right, tell me about everything that happened. I'm like, there's no way.
Thinking about some of your very early accountants, when would you get your box of junk into the accountant's office?
Right before it's due. What is what, March?
So that's about kind of normal. I'm not going to call it good, but that's normal for a lot of business people, at least here in the Midwest. So my approach, and I'm not the only one who does it this way, but I don't think there's that many people that do it like we do it here in our area in Northeast Indiana. I am a member of a national CPA firm association of small business accountants, and we all use the same approach, which is keep things clean. We do it, here's how we describe it in my national association. We do a tax return 1 week at a time. And it's not for what you would think. It's not the fact of being busy all year. What it is, it's basic communication, because I'll go back to what I was trying to say. When you bring in your box of junk, if I were to phone you up and say, Dakota, I'm looking at your box of junk, and back in January, what year are we in?
Yeah.
January 2022, or whatever. Back in January 2022, I see that you made a $3,000 purchase at Costco. Can you tell me what that is? And you might say something like, well, shoot, Dan, I go to Costco 5 days a week, right? I'd be like asking you, what'd you buy at Chipotle?
Right.
Do you always order the same thing every time?
90% of the time.
Okay, well.
That was a little easier. That one's way easier. But yeah, the funny thing is we've spent massive amounts of money. It would be like $20, $30, $40, $50,000. You don't know what you spent that on? No, I don't.
If you're doing enough business, it becomes really difficult. I mean, we're human. Do you remember do you have Chipotle every day for lunch?
90% of the time, yes. I already had it for lunch already.
So you could probably tell me what you had for lunch last Tuesday. But like someone that every day they get something different, I like to use the analogy. If I were to ask you what you had for lunch last Tuesday, can you remember? And people are like, hey, I can look at my calendar. Yeah, I can kind of work my way back to it. Well, if I ask you what you had for lunch 3 months ago on the second Tuesday, Can you remember? No, man, I have no clue. So why would you use an accounting process where you're trying to rely on your memory from something that happened months ago and years ago? So in our world, we're just breaking it down into basic communication of, we're looking at your stuff. This is what you did. Can you tell us what you were trying to do? And then we'll get the accounting right.
Yep.
And it's just, to me, it's really about communication.
100%.
That's a big part of our foundation at our firm. But the real reason we do that is so that people can participate in a forward-looking tax planning process. So in late summer, early fall, we meet with all of our business clients, and that's what we specialize in, is family-owned business. And we talk about, here's how you've done for 7 months or 8 months. And what do you think will happen the rest of the year? And then our clients tell us, this is what I think is going to happen. Now, we then marry together 7 or 8 actual clean, scrubbed up numbers, months, with what you think is going to happen for the balance of the year. And then as accountants, accountants are historians, let's face it. But if we're going through that process and looking at 7 or 8 scrubbed up clean months, and then we're adding to that what you think is going to happen, now we become more than historians. We can talk about, this is where your year is trending. And then depending on your business operation, it can be segmented into a couple different companies. So as accountants, when we do a tax return, we have to go through the books and divide things between things that are taxable for income and non-taxable income for income. And we have to divide things also between things that are deductible for expenses and not deductible for expenses. So at our tax planning time, we do that same exercise. We think about each company and we think about, what will the tax return look like? And keep in mind, this is late summer, early fall.
Yep.
We do that for each company, and then we mock up what each owner's tax return would look like. And so if you think about this, 9 months before you'll ever file a tax return, we are having a conversation about how it is trending and what it's looking like. Now, maybe someone's got a better way to do it. I don't know. There's always a better way, but that's the best way I know to think about it and quantify it. And then if you're okay with the way things are trending, great. But if you want to affect a different result, I mean, I think that's a very good way to do it. So that's why we do it our way at Warrior. And that's the only way we're going to do it. Like people that want to bring in a 1-year box of junk, we might help someone as a one-time accommodation, but
Yeah, from
we turn away anyone. In fact, right now, we are accepting some new clients if it's a fit, but we're starting to slow down, who we want to work with as customers, because, I mean, we can't work with everyone.
Right.
And we want to work with people who are going to use our process.
Yep. That's what I was just about to ask, is who do you look for in a client? Is it just anybody who's like, hey, I'm willing to listen, do whatever you have, or what are you really looking for in a client if somebody is interested? Because I'm sure a lot of our people are real estate investors. They're going to be interested in probably a CPA.
Yep. Well, I have a couple things to say about that. Here's what I want to say. At Warrior, we focus on people who appear to be good at what they do. Because if it looks like, you just started a business selling, I don't want to pick on anyone, but let's say you're selling candles out of the trunk of your car. I don't know if that's a sustainable business, and I don't know if you need an accountant for that.
Yeah.
But if we're talking with someone that they're really good at what they do, but they've had a continued problem with not knowing where their numbers were, having unexpected results for their tax situation, but they're really a good company, and maybe they have good cash flow and good operations and good principles with good reputations, those would be a good fit for our services at Warrior, because if they have some of those things, that we can't do for them under control, we can jump in and do the accounting all day long. I mean, we're accountants.
Yep.
That's what we do.
Yep. Yeah, I'll say for anybody who is thinking about whether they can afford it or whether they should spend the money, because I remember when we first started, we were actually talked to you probably 3, 4, 5. I can't remember how long ago it's been, but it's been a long time. And I remember talking back then, in the amount of money that it was, I think it was $100 a week or something like that. And to me now it sounds like so small, but to then it was like, man, it doesn't make sense for us financially right now because we're not making enough money. But
yeah, we got everything we need in Google Sheets.
Yeah, it's like we got it all here. And the funny thing is, if we would have had that foundation, we wouldn't have ran into the issues that we have. So for anybody who is thinking about it, I would suggest doing it now and doing it earlier. That way you don't have to build and then backtrack. And then, yeah, we just came into a lot of issues from not having it built up front. So,
and part of our process too, part of the way that we were so successful is by leveraging a lot of debt. And in order to leverage a lot of debt, you have to be bankable and you've got to have good books. And so we had questionable, okay, decent 50% good books that we gave to the banks, and then they eventually shut us down and stopped giving us loans. And basically, if we had Warrior previously, we would have gotten lines of credit opened up when interest rates were better, and it probably would have saved us a few $100,000 in interest and miscellaneous other things that, like, opportunities too, because we weren't certain if we would have the money to actually keep the deals. So there were times when we sold stuff because we just needed to, because we were maxed out on everything, when if our books were better, we would have had more
I want to shed a little more light on that too, actually, because whenever we first started, they were giving us loans based on my work, not based on what the company was doing, because
Your
the company
W-2 job.
Correct. Yeah. So they were giving us loans based on that. And then what Tony is talking about is we were not getting our tax returns done, and so the banks are waiting for tax
You
returns.
were extended, weren't you?
Yeah,
Constantly.
exactly.
Every
Constantly
year.
extended.
This is kind of normal for business people. They think they're saving money by bringing that box of junk in, not thinking about how their accountant has to go through and spend it in it. You know, they have to do the accounting for an entire year, and not just for your company, but for all the multiple companies you have, and then multiply that by the number of clients they have. So if every one of their clients, they're using the box of junk method or virtual box of junk method. Man, that sounds like a horrible way. I lived it in the past. I understand how it works. I just don't think it's appropriate for my clients who want the caliber of service that I want to deliver.
Yeah, 100%. And it was a game changer for us, again, just to be able to get the financing, but then also be certain on our numbers, because we weren't even sure if we're making money at that point. We're like, we don't even know if we're making money. We don't know, are we doing the right thing? And we scaled like massively, for where we were. And then we're like, I hope we're going in the right direction, but we didn't know because it wasn't. We were getting it once a year. And then when the once a year came, we're like, yes, we're finally here. We're going to know if we made money or not. Oh, you're delayed. Oh, you're pushing it back. Oh, you just threw all these numbers together that we aren't even sure are accurate because you just slammed it all in there. All right, well, this might not be working out. And so, it was a learning opportunity. But for anybody who's thinking about it, I would definitely suggest doing it early. It's going to help you with your certainty. It's going to help you with financing. It's going to help with everything that you can do in business. Is so important.
Yeah, there was a period of time, too, Dakota's, like, you know, for the people that are listening, they're like, how do you know that you're not making money? Or, like, how wouldn't you know? Like, obviously you would know. Well, when we scaled probably last year or like a year and a half ago, we went from, you know, buying 3 houses and then flipping 2 to buying 8 houses and then flipping 4 to buying 16 houses and then flipping 3. And it was like we were buying so much volume and our holding times were getting longer. And so we were requiring a lot more capital at that time. And so it was like, man, we're borrowing a lot more money than we are making consistently monthly. So it was like, man, we're leveraging, using a lot of leverage.
Very scary. Yeah, but good accounting takes away a lot of fear. Because we saw inequity and I had spreadsheets for it, but it's a whole different thing when you can see it on your profit and loss on your balance statements and you can understand where the money's going. It's a game changer. But enough on that. My question is that everybody's gonna be asked what you talked about is the strategy. So I know you don't like to answer these questions, but I want to ask it anyway, just to see if you will. The 3 best strategies for real estate single family to save money on their taxes that you think that like people miss or do not use, or like that you think would be the biggest ones that people want to hear about, because that's what people love to talk about, especially real estate guys.
Well, sure. Yeah. You know, and I'm an investor too. We can talk about that a little bit later.
Yep.
I've been investing since 2006, so just a little while.
Yep.
I think when it comes, we're talking about single family homes.
Yep.
Probably. Oh, yeah, that's a really good one. See, I'm glad you're here. I'm glad you're here, because I always have a million things on my mind. You know, one thing I want to say, just a brief sideline. Sometimes people put me on a pedestal. I'm just a human being. I am very humble. I try and surround myself with good people, and in all areas of my life. So I do have one of my colleagues with me today, and he's not on camera. but we work very closely on a number of projects. And he brought up something that we see again and again and again from people that have done do-it-yourself taxes. When you buy a rental property, the IRS gives you the ability to take a deduction for that rental property. It's got a goofy name in the accounting and tax world. It's called depreciation. And what that means is the accounting definition is the systematic deduction of your investment in that property over a prescribed length of time. So the IRS tells you what that length of time is. These laws change every once in a while. They really were turned on their head back in 1982. Some things were turned on their head when we had President Trump and the Trump tax bill was changed. It was really good for real estate investors, despite what you might hear in the news. So for a single family home, you can take that home, and if you get it set up correctly, you can take a deduction over 27 and a half years under current rules that have been around since 1982. Now, in addition, under the Trump rules, there are some cases where you might be able to take a faster deduction for some things. Now, I need to preface all this and say one thing for all your listeners, which is my professional standards require that I say this, and my insurance and stuff like that. I'm a certified public accountant. And everyone's tax situation is different. It's unique. It's unique as DNA. So while I'm a CPA and I'm offering some of this advice for your listeners, I'm not your CPA. You need to find an accountant, enrolled agent, CPA, someone you can work with who can listen to your circumstances and give you the correct advice. But if you're doing do-it-yourself taxes and you are not taking that deduction for depreciation, man, get yourself some knowledge, get yourself a tax professional now. It'll make a huge difference, especially as you build.
Yeah. Do you have to be considered a real estate professional in order to use that, or what is the real estate professional? Well, the
rules. Okay, the rules are complex in that area. Real estate professional would be someone who is typically licensed either as a builder or a realtor, but you have to be spending the bulk of your time in real estate. And now this doesn't really intersect with depreciation. Like if you were, let me think of a basic person, a factory guy.
Yep.
If you're a factory guy and you're making, I don't want to throw numbers up, but let's say, you're supporting your family, so maybe you're making $100,000 a year assembling cars, and you buy a rental property. There is probably a deduction for you if you're filing a married joint return. There's probably a deduction for you for the cost of that home against the rental income in terms of depreciation. Okay. Now, if you start loading up on properties and you have all of a sudden 10, 50, 100 properties, that could change. There are some limitations, and particularly if you're high income in your household. If you're high income in your household, you can end up in a situation where if your depreciation eats up all your rent income, your depreciation and your deduction eats up all your income, you might be in a situation where it would create a loss. And that's where the rules start to get complex pretty quickly. Mm-hmm. You look at things like your other sources of income and how you earn the income there. And you might be able to take a deduction. You might not. What you're driving at is, in some cases, let's say you were a rich doctor and you're making all kinds of money. And then you heard on the Tony and Dakota show that you can get deductions by buying properties.
Yep.
It's true, but if you're super high income, your deductions might be limited. You can put those deductions on paper, but you can't deduct them in total against this year's income. You might have to carry them forward.
Okay. What does real estate professional status get you?
Well, it does if that is, let's just say you have no other source of income and you're just earning your income as a builder or a realtor or investor, you might be able to deduct all of those deductions, whereas like a rich doctor couldn't. Mm-hmm. That's kind of the short paraphrase.
Okay.
Oh, yeah, all in 1 year on one tax return as compared to having to carry it forward or spread it out differently. Does that kind of make sense?
Yep.
Yep.
What is the qualifications for a real estate professional again? I know you said it's like the bulk.
There's a lot.
Yeah.
Well, tax rules are complex and these things do change regularly. So if it's something you're interested in, this is what I'm a big fan of, Tony. As accountants, we have training like in in the spirit of the law, in the processes. But every time when you have a tax question, I mean, it sounds weird, I know, but we have to go look it up. It's kind of like building code. I mean, building code changes from time to time, right? But, you know, do you know what the rise and run needs to be on stairs? Do you know that off the top of your head?
Nope.
But you know where to look it up, right? Because you're a builder, licensed builder, right? Yeah.
Yep.
So you know where to look it up. As accountants, when that question comes up, we just go look it up and do a brush up and make sure that we're dealing in the current rules. And so this is what I would encourage someone to do. Look up those rules and see if you think you qualify, and then talk with a tax professional about your qualifications. I will tell you one other secret, and this is $1,000,000 advice here. The secret to so many things in the tax world is papering it. Do you know what I mean by that, Dakota? Do you know what I mean by that, Dakota? Tony? I'm sorry.
Yes. Documenting everything and the reasons of why you made certain decisions, meeting minutes.
Yes. So
not fabricating them like potentially Trump is getting in trouble for.
Is he? I heard there was something, but so I don't know his circumstances, and I haven't read the stuff, and I don't believe what I read on the news anyway.
Yeah, I've just been seeing it come through, the news feed.
Was it saying that he was a real estate professional, and they're saying maybe he wasn't?
No, I think it's just like, these documents potentially were falsified in order to make sure that he could lose the most money possible on paper. So he was trying to paper things that didn't happen necessarily.
According to the news.
Yeah, according to the news.
The news, I don't know.
According to the people
and if you listen to what Tony said, they might have falsified. Like, it's like, yeah, he could have. Okay, like there could have been a lot of things that happened, but yeah, that is funny.
I could piss off a lot of your audience.
You can piss them off. That's fine.
Gets more comments.
I am a Trump fan.
Yeah.
I've long been a Trump fan before he was president. Doesn't mean I idolize him and put him on a pedestal. Right. I think it would have been great if he would have had like a what do you call it? A public relations person who spoke most of the time. I'm a fan of his economic policy.
Yeah,
it was
100%.
good for the economy, and I don't care what anyone says. I 100% believe it was good for the economy. I 100% believe it was good for investors and business people. I 100% believe it was good for every household.
Yeah.
Even when you saw on the news, like, this is only for the rich. No, there were so many deductions and tax lowering things for basic average people. It was incredible. Now, there was something I wanted to say, and we kind of got off track on a different venue here. What were we talking about?
We were talking about tax professional status,
real estate professional status.
Oh, no, you were talking about
papering.
Yeah, papering.
The secret
papering.
of papering. So what I mean is, if you want to say you're a tax professional, there is a requirement that you can document how many hours you spent in real estate. I'm pretty sure you guys could evidence that. But for someone that maybe they read the rules and they think, man, I'm close, I'm just not sure I'm there. What you need to be doing is papering it. You need an everyday calendar. Like, I went and spent this time, and I changed this broken toilet, and I fixed this door, and all the stuff that you have to do as an investor. I went and installed new flooring and put new paint on, and the more you can document the time that you spent, the better off you'll be. What people do is kind of like the mileage log. If you want a deduction for your automobile, do you want to play a little round of is it true or is it not true? You want to play a random question here?
Sure.
Like a game? Okay. So
Tony will play.
Tony is a good one for this. Although what I've learned about Tony is he researches stuff.
Yes.
So
yeah.
I think it's about 50-50.
Yeah.
Do you have your pilot's license?
I was working on my pilot's license. You did a background check. I can tell.
Your middle name is Eugene?
It is. So here's what I want to ask.
You look good for your age, by the way.
Thank you. Damn it. I look pretty good for 32, don't I? Now, here's what I want to talk about. When it comes to an auto deduction, people will, how do I set this up, Colby? It's like a truth or... Factor fiction. Factor fiction. If I want to take an auto deduction, is it fact that I need to keep a mileage log, or is it like optional? What would you say?
Well, depends on if you want to take the mileage or you want to take the the maintenance.
That is, so what you're talking about there is the standard mileage deduction versus the actual cost method. And you are right there are falling into what I call a tax myth or urban legend. If you want to check these out, I have a bunch of them on my TikTok. Because people think if I just drive my car and want to take actual costs, I don't have to keep a mileage log. Nothing could be further from the truth. If you want any deduction for your car, you have to have a mileage log. It's the law, and it became more of a. The law got definitely more firm and more harder and rough under President Obama. Under President Obama, they changed the law to say that you must have a mileage log, period, or no deduction. And I don't care whether it's standard mileage or whether it's actual cost. The reason you have to have it with actual cost is this. If you have a car that, you're driving to the grocery store and you're taking on vacation, but you're also using it for business, how do you split that up? Because you're never supposed to deduct personal stuff. So how would you divide that up, absent a mileage log?
Guess.
Use the guess method. So this is an example of what I'm talking about when I say you have to paper things. So I don't care how you do it. If you want a deduction for a car, just get in the habit of keeping a mileage log. There are low-tech ways to do it. There are high-tech ways to do it. The recipe that IRS prescribes, this is worthy of writing down. You have to have the date, the starting odometer for the trip, the ending odometer for the trip, and the destination or purpose. If you have those criteria, if you get audited for an auto deduction, I'm not going to say you're going to win because, anytime you get audited, there's still a chance you could lose.
Yeah.
But, man, if you I have had mileage audits, and if you have that your chances of not losing go way up. If you don't have that, ever since President Obama's law, you're going to lose.
Yep.
You have to have a mileage log, whether it's for standard mileage or whether it's for actual cost.
I want to clarify one thing.
The medium tech way that Dakota and I do it is through Mile IQ, which is an app that you can purchase on your phone. I think it's like $60 a year. Yeah. Is that what it is?
It's good and bad. It's better than nothing. Does it have starting odometer and ending odometer? Because I read a lot of tax court cases. If you do not have starting odometer and ending odometer per trip,
it has a spot where you can put it in.
You should be logging it, because if you do not log it, that log is not compliant. It's better than nothing. I'm going to give you that. But the secret to so many tax deductions and optimizing your situation is paper trail. Yeah. And on that, the recipe is exact. It's not approximate. There's a lot of tax court cases. Do you remember when, I'm trying to remember what that mapping software is, MapQuest.com. Do you remember those days?
Yeah.
Yep.
So back when MapQuest.com came out.
And you had to print off how to get to somebody's house.
And people so what business people would do is print those off and put them in their planner. At the end of the year, they would add up all the miles that they had. People went to tax court with that, and they lost. And do you know why they lost?
No starting and ending odometer.
That's right, 100%. But what the tax court said is, furthermore, the miles that MapQuest.com listed are aeronautical miles. It's like if you fly a helicopter straight up in the air and measure from here to where you're going.
I took a shortcut,
Yeah. They want to know, the IRS wants to know how many miles did your tires go. So.
I have a question about that. Okay. So you said that you can't deduct unless you track the miles. Let's say that there's a vehicle, though, it's over 6,000 pounds and it's December 31st and you had no miles tracked for all year. You can still deduct it on that date because you're buying it, correct?
Well, it's a separate thing.
Yeah.
Okay.
What we're talking about here is
two separate rules.
Yeah, there's a couple things that intersect. There is a deduction for buying a heavy SUV, and you can deduct a lot of it. Years ago, you could deduct $100,000 for an SUV. So back in those days, you would drive up to a business and you'd see a Hummer. In the parking lot. And the next year, you'd see 2 Hummers. In year 3, you'd see 3 Hummers. And then you'd think to yourself, this business only has one owner and one employee. What the hell is going on? How many Hummers does the guy need?
With the reliability of the Hummer, you need 3.
Yeah, 100%. 100%. You know the one's going out. Or both. Or all 3.
I think personally, I don't think that's a real good investment because do cars go up in value typically? I mean, they have in this used car market, but in a normal time, do cars go up in value or
mostly
keep their value?
Mostly go down.
Yeah. So why would you buy something that's going down in value? I mean, as an investor, wouldn't you rather spend your money on something that, like, I would rather put my money towards a duplex or a commercial property myself.
Yep.
But okay, so you can deduct if you buy something that is over 6,000 pounds GVW, it's possible that you could deduct a lot of that vehicle in 1 year if you're using it for business, but you still have to have a mileage log. This is an urban legend and tax myth that's out there. Like, you just buy a truck and write it off, and then there goes your profit. And you don't have to pay taxes. Well, the problem is if you use that more than 50% for personal use, you have to give back that deduction. It's very salty. A lot of people that have taken this deduction don't realize it. So if you stop using it for business, you have to report that as income that year. That's what the tax law says.
Wow. So let's say that you did it, let's just say last year, you used it for a couple years and then now you decide to retire it. What's the situation with the vehicle 4 years from now, and then now we're going to use it for personal use?
You may have to give that deduction back. I mean,
as a capital gain?
It would be depreciation recapture, I think.
Oh, okay.
That's interesting.
So depreciation recapture is essentially income on your tax return.
It could be capital gains if it's enough.
Yeah.
That portion of over what you paid for it.
Yeah. If you did have one of these weird car markets where you bought a 6,000 pound GVW, you took a write off all in 1 year, and then you stopped business and took
Porsche Cayenne.
and then a Porsche Cayenne. It was at over 6,000 pounds.
Yeah,
I don't drive
it just
that
barely
fancy
meets
stuff.
the requirement.
Okay.
And
So let's say you're in business for a few years, and then all of a sudden you're like, screw this, I want to go back to having a stable job where someone else tell me what to do and that kind of stuff. If you read Rich Dad, Poor Dad, you would chuckle at that. If you stopped using that for business, you have a problem. You have a problem. I mean, if you're tax averse and you don't want to do the right thing and report the depreciation recapture, because if you stop using it for business, I mean, the rule is it has to be north of 50% use for business. In that personal use, by the way, typically if you're in some kind of business situation, it should be added to the owner's W-2. It's another thing that people don't realize about that. So I know it's the trendy thing, like just get an SUV and write it off, but it's much deeper than it appears on the surface. And that's where you need a competent tax professional, and you need to have a paper trail. And the log showing that your use is north of 50%. Because if you can evidence that, great. If you can't, man, you got a problem. You got a problem you didn't even know you had, right?
Yeah.
So.
Those are the worst problems.
What does your organization look like today? Because we got Colby back here.
Yeah.
You have I can't remember the one lady's name. She's like Vicky.
Yeah.
Yourself. Is that pretty much your entire team, or how big is your team?
Can I talk more globally?
Yeah.
I have my CPA firm. I also am an investor, and I'm a licensed builder. And I have a separate company for that. I don't do really work for others typically. I do it for my own portfolio. In addition, I have a venture that I started about 5 years ago. I tried to get up and going, and I didn't do a real great job getting it where I wanted to get it. So this past year, I rebooted this venture, which is myfavoritecpa.com. I took my 26 years of professional experience dealing with business owners and investors, and I put that in the form of a course 5 years ago. And I did a poor job marketing it 5 years ago. I'm pretty high tech, but I really needed some help. This year, I decided to reboot it. I hired the help, and I have my course live, up and running. It's got really good content. It's about like if you were getting in business, should you do it in an unincorporated way? Should you set up an LLC? Everyone sets up an LLC nowadays. But if you set up an LLC, what do you need to do it right? And then how do you file the LLC tax form? It's a little bit of a joke. Do you know what the LLC tax form is?
I think that it automatically gets taxed as a partnership if you don't choose a different election right off the bat, right?
Another tax myth and urban legend. So it all depends on the facts and circumstances. So when you form an LLC, Here's what I can tell you. You have 75 days generally to tell IRS from the minute an LLC is born how you would like it to be taxed. If you don't tell IRS, they're going to make a decision for you. Anytime IRS makes a decision for you, by the way, Tony, do you think it's going to be in your favor or?
Probably good for them.
That's right. So in my course, I describe the different ways an LLC can be taxed and kind of the rules in the game. I should have brought some props today. I like to talk about business as a deck of cards. If I were to take a deck of cards and, set it down here on the table, you might have a question. What would that question be?
What game are we going to play?
That's right. So many people get into business and they establish here's my deck of cards, here's my LLC, or I'm just in business. I'm just going to have fun. But don't you think you would be so much more successful at the game of cards if we talked about what game we're going to play? Because with a deck of cards, you could play poker, you could play
Blackjack,
Go Fish,
Rummy.
Yeah, Jim, whatever. So if we talked about what game we're going to play and you give me a rundown man, I played that when I was in high school. Can you tell me how that works again? Well, there's the right bower and the left bower and, this is how you win. All right, don't you think my chances of success are going to go up? So that's what my course is all about. It's a primer on what you need to know in business, the different ways you can be taxed, and why you might want to choose one versus the other, and then some elements of what you need to do things right. Because just setting up an LLC, it's like a thing that everyone does nowadays. If you can fog a mirror, set up an LLC. But is that the right tax decision? It depends. Everyone's tax DNA is different and depends on what you're doing with it. So my course is about helping people understand that. And it's the things that other accountants and CPAs, they're just way too busy digging out of 12 months worth of garbage for every client that they work with that they don't have time to talk with their clients about. That's why I put my content in the form of a course. And you can watch it, what do you call that when you watch Netflix? Just binge. You can binge watch it, or you can watch it a little bit every day in a week. You will have the knowledge that would help you get started in a business, or at least you would know some ways you can do it, in some ways that might make sense, and some ways that might not make sense. And know what you're getting into. It's the rules of the game. That's at myfavoritecpa.com. And I do have something that your viewers could check out. The URL for it is myfavoritecpa.com/training.
Okay.
So in that course, it would be you can kind of preview the course without buying the course. And I think that's worthy of looking at.
Yeah, that's what I was going to ask is where they could get it. So myfavoritecpa/training.
myfavoritecpa.com/training.
I like it. So actually, you brought me to a question that we get all the time. You kind of touched on it, but I hear this question so often. Whenever somebody is going to buy their first investment home, should they open an LLC? And I know everybody has different thoughts and opinions on that. I would like to hear yours.
Well, okay.
Every single newbie.
Every single. I literally got it asked 3 times yesterday.
Yep. Yep. The first thing I have to say is this. I talked about what it takes to become a CPA. One of the things it takes to become a CPA is we have to have more legal education than your average person. Okay. So I do possess more business law education than your average person. And so I think I'm qualified to talk a little bit about this, but one thing I also have to say is I'm not an attorney. If you have legal questions, you should ask your attorney, okay? Because I can't dispense legal advice. But here's what I would say from my vantage point. If you run an LLC properly, if something goes wrong, and people always wonder, well, what could go wrong with, a rental property? Hey, have you guys ever experienced something that could go wrong? Just giving me an example here.
No, I don't think we ever have we?
Just some small stuff, just like a lawsuit.
Yeah.
Yeah, getting sued. I mean, we've had one that was in Toledo, Ohio that was just the worst, and it had so many issues. I don't even... the HVAC was going bad, that it was letting out ozone that could potentially kill everybody.
Oh my God.
The gas line was bad. There was just so much.
Okay, so think about that for a second. If that building exploded.
Yep. Pretty good potential.
Was it insured?
Yes.
Okay, so insurance is your first line of defense, and I think that's a good line of defense. Now, here's the thing about insurance. all insurance companies. I'm going to piss off your whole segment of your
They
people
know.
that sell insurance. But insurance companies, I feel like their game is getting out of paying claims.
100%.
It's in the fine print. Like if you didn't have the gas line inspected or whatever, then they're not going to pay.
Yep.
Yeah, banks are pretty big buildings in the city, and then you look at the second largest buildings, they're the insurance companies. So, like, they figure out how to keep the majority of their money.
Yeah.
So insurance is your first line of defense. I have a friend that's an attorney who told me that when years ago, insurance contracts used to be when you would print them out like 2 inches stack of paper, and it was on onion skin thin paper, and it was microfine print on both sides of the document in legal size. So you would print it out, and if something came up, they'd say, well, it's on page 432, Roman numeral, I, subletter J, 1A. If you did not shovel the walk and someone slips and falls, we ain't paying.
Yep.
Okay, so now if the insurance company refuses to pay, or the other thing I want to put on the table is this, what kind of liability coverage do people typically get on insurance? Like 100,
Yeah, I would say
300, something like that? So $100,000. Okay, so if someone would have gotten hurt, if that building exploded, let's say your liability coverage was $100,000, the insurance company is like, yep, this is why you bought insurance, we're paying out that $100,000. What if the lawsuit was for $10 million?
Then you got to cover the other 900.
So-
or 9,900,000.
So they would look to the owner of that building in that case. So if the owner was Tony in Dakota, they would say, thanks for the $100,000 check. Where's the other $9,900,000 coming from? We want a list of all your assets and so on. And I think that's, in paraphrase, that's how the legal process would go. Now, if, by contrast, if that building is held in an LLC, same fact pattern, it blows up, you got $100,000 of coverage, the lawsuit is for $10 million, they would be looking to the owner of that property, that LLC, to take care of the other $9.9 million. Now, one thing we have to be careful of is if you ran the LLC property, I am a big fan of having a lawyer set up your LLC and make sure that the lawyer making sure that you have all the attending documents like an operating agreement, lease agreements, all the different stuff you have to have to have that corporate veil of protection. So if the lawyer took care of that, then it's things like, were you acting like an LLC? Were you depositing the money into a bank account that had the name LLC on it, your company name LLC? And hopefully you do not want to have your names on it, because I see business people, over the years, I've seen people, business people do this all the time. XYZ LLC owned by Dakota, or Dakota owner. Not a good idea, I think, because what are you doing if you get sued? You're just saying, come after me.
Right.
So I would have the LLC name only on an LLC bank account. In that bank account, you're depositing all LLC income, and you're paying LLC expenses and only LLC expenses out of that bank account. Those are elements of doing things correctly and getting that corporate protection. If there are people out there who pay anything and everything out of their business account. They're paying groceries out of their account. They're paying the mortgage payment when they're short at home out of the account. When they're short in the LLC, they're depositing their spouse's check into the account. And the checks have not only XYZ LLC, but also Dakota on there.
Yep.
And little things like also paying attention to your title. Like every time that you sign a document for the LLC, you should be putting your official title, which generally speaking, at least in Indiana, should be member. Member, not owner. When you put owner, when you think about someone...
Corporate personhood.
Yeah. Well, I like to create a visual like, who's the owner of Berkshire Hathaway?
Warren Buffett.
Warren Buffett. So what would Warren Buffett do in this situation? Does he sign a check, Warren Buffett, owner?
Probably CEO.
No, he's signing.
He probably doesn't even sign them anymore.
But if he did,
I'm going to drink Coca-Cola, eat my popsicles, work out, and play chess.
but what Warren Buffett would be doing is because he knows the rules. He's making sure every time he's signing in his capacity as an officer or as a member, not in his individual capacity. When you put comma owner, I wonder if that could expose you to getting sucked into a lawsuit. So those are elements of running an LLC correctly. And if you're going to form an LLC, why would you go to all the effort if you're not going to run it correctly?
Yeah.
Right.
And so I guess what I would say is everyone's circumstance is different. It depends on your risk. It depends on your insurance. It depends on your legal advice. But personally, I think it's a good thing to, if you have enough risk, I like to see each commercial property in its own LLC. I like to see residential properties, maybe a couple few in each LLC. And I say that because I have seen lawsuits throughout my career. And I have had people who thanked me later, like, I am so glad that I followed your advice because this bad thing happened. And then they wanted to come after the farm. And before I met you, I was definitely against corporations and LLCs, and you talked with us about it, and we decided to do what you said. And then when this lawsuit happened for some crazy number, we were able to walk away from the lawsuit, and our insurance paid what they paid. And it was that kind of thing where there was a lawsuit in excess of the insurance coverage.
Yep.
If you do things right, you're not going to regret it. If you take anything short of right as a shortcut, and shortcuts, I mean, I lose sleep over things like that myself. Does that kind of answer your question?
Yeah. I think that's really solid advice.
One building versus 10.
Yeah. Would you, if something bad happened, would you, I mean, I'm Dakota, I know you, and you would be pissed to lose one property. But if you lost your whole portfolio over some dumb thing, how would you feel about that?
Yeah. It would definitely suck pretty bad. I know we could rebuild it, but it would suck.
You would, yeah. No one, I mean,
Yeah,
so
no.
why not put the infrastructure in place so there's something bad happened?
Yep.
That it's, some people call it belt and suspenders. And for your audience, the one thing about having LLCs and corporations is you need to budget money for professional advice and professional services. You need a lawyer to write all the documents and review the documents, and you need an accountant to do all the stuff to dot the I's and cross the T's. Because if you go through the exercise, I'm going to say it again, if you set up an LLC and don't use it correctly,
Yeah.
you might as well, if something bad happens, you will regret that.
Yeah, it won't protect you anyway. I think that's really solid advice. Honestly, my advice to people is always like very similar. Obviously, we know the answer is yes, you should open up an LLC, but if it's gonna stop you from doing your first deal, just get your first deal and then like move it to an LLC or do something later. Like, don't let it stop you.
I agree with that.
Yeah, so
I agree with that.
don't let it hinder you, but at the same time, yes, you should. Like, you definitely should open up an LLC and then do it correctly.
If you're going to buy it in your own name, just make sure you have a really good insurance man.
Yeah.
My dad used to say with insurance companies, more than the insurance company, it really comes down to your agent.
Mm-hmm.
If an agent is representing you, they should be thinking about your interests. That begs the question, are they the insurance company's agent or are they your agent?
Mm-hmm.
I want someone who's my agent working for me.
Yep.
So if you can find that right person, if they get your back covered, you know, insurance should be cheap. I mean,
They don't pay anything anyway, so.
well, if you have the right one, they will have your back.
Yeah.
But so I poke fun at it, but I do believe in good insurance men.
Yeah.
Also.
Yeah, we've had some good experiences with Linda Jackson, and she helped us out on some stuff actually with one of ours, and she did help. So yeah, I can see how them going to bat for you definitely does make a difference because they're going to be going to the company and saying, "Hey, no,
We gotta take care of this."
Yeah,
Yep.
and then if you have that relationship, then they are going to be like more apt to do it because like she really did have our back, and so we do appreciate them.
If you're calling 1-800-GEICO, I mean,
yeah, nobody cares.
Yeah, I know.
Yeah,
It doesn't sound like a good situation.
yeah.
So we're getting close to the hour mark, which is usually where we cut it off. We have a final question that we like to ask everyone, and it's usually a pretty deep question. And so you're on your deathbed, and you have a final message to the world. It can be a sentence, a mantra, a paragraph, a sentence, a billboard in front of Times Square. It's your final message that you think that the world needs to hear. And what is your message?
Wow. That's pretty crazy.
And all your TikToks are gone. Everything's gone. Everything you've ever created is gone. This is your last one that you get to share with everybody.
Here's what I think I would tell my kids This is something I was raised with. And this is a quote by President Calvin Coolidge. When I was a kid in my boyhood home, this was hanging on the wall, and my dad used to make us read it every day.
Wow.
And this is it. It's press on. Nothing in the world can take the place of persistence. Talent will not. Nothing is more common than unsuccessful men with talent. Genius will not. Unrewarded genius is almost a proverb. Education alone will not. The world is full of educated derelicts. Persistence and determination alone are omnipotent. So what that's saying is, don't give up. You know, you can be successful with education. You can be successful without an education. There's a lot of people who give up. Also, I guess I would say this: people are not going to come and hand you your dream. You have to get out of bed every day and work it. So I know the thing sometimes is, I'm just going to buy a rental property and then I can quit my job. People are not going to come and hand you your dream. You have to be willing to work it. And more importantly, I know you guys know this, to be successful, it's about sacrifice. What are you willing to sacrifice? The more you're willing to sacrifice, I think the more you may see success.
Yeah.
But if you're not willing to sacrifice, don't expect the world to hand you anything.
I love that, because the funny thing is, it's what you're willing to sacrifice, and the funny thing is, just putting it on the line doesn't necessarily mean that you're going to lose it, but you have to be willing to
You
lose
have to
it.
be willing.
Yeah,
Yep.
that's awesome.
Yep. So that's kind of what I was raised with, and it made a difference in my life. And another thing that my dad kind of drilled into me was pretty good advice. He used to, when I was a kid, he used to tell me, if I remember when I was a little kid, and I was kind of shy and timid, and I went to McDonald's with my dad, and he's like, your drink's empty there. You want another? I'm like, yeah. You go get me one? No, go up there and go ask him. And I was I just fell apart. Like, I don't want to go up and ask.
How old were you?
I was like 5 or 6.
Oh my gosh.
And so my dad used to push me and say, just go and ask. And the worst they can possibly do is say no. And every time in my life when I met like a wall, he would say, just go and ask. Remember, the worst they can possibly do is say no. And I know on things for you, that's kind of, if you think about some of your successes, you've gone and asked.
Yeah.
When other people are just too scared to ask. So I think be willing to sacrifice. Ask. And if someone says no, are you going to cry yourself to sleep over that?
Oh, go ask another one.
Next.
Yep.
So it's a little bit about my life.
Love it.
So we know myfavoritecpa.com is one of the ways to get a hold of you.
Yep.
myfavoritecpa.com/training is how people can preview the course
for
and
free.
And then if someone wants to hire you as a tax accountant, they need to take the course and then give you a call, or they need to send you a message.
If someone took my course and reached out to me, we're almost closing the door and taking new clients right now. It's open a crack. If someone had taken my course, I am more interested in talking to them. If someone is a hot mess and they're not willing to sacrifice, if they don't want to do things right, and their reputation is dodgy, we're not looking for anyone like that. I'm going to be honest with you.
Yeah.
So
the good folks should get a hold of you at
you
an
can
email or like a phone number. What do you think?
So let me think. I wasn't prepared for that question. Yeah. Yeah. Well, I'll give you my personal assistant's phone number, and this is only for people that are looking for an accountant, and I would be willing to talk to someone that meets the criteria I talked before, and my assistant talks with them. And honestly, if people call up and they're rude to my assistant, good luck talking to me. I'm not going to talk to you, because my assistant is my right-hand man. And her number is 260-459-9998. I've made a big difference to a lot of people's lives. That's one thing I can pride myself on if I were to drop dead tomorrow. But my assistant is my right-hand man, and people should treat her like gold. And all my people are good, and I don't want any of my people disrespected. So
100%.
if people met those criteria, I mean, I've fired clients over, like, if they want to be jerky to my people, goodbye.
Right.
Goodbye.
Yeah, it's funny. I've noticed that I can allow people to be meaner to me, but then as soon as I hear somebody that like talk to like Ryan or like affected them in a certain way, I'm like,
Here's your box
let
of
me talk
junk.
to him. I'm like, let me talk to him. Most of the time they're like sellers or something like that. I'm like, all right, now like you got me upset. I'm like, dang, I gotta figure that out because I actually do get a little bit upset and like
I get defensive with my people. I mean, they watch my back, and so I want my people treated right. But
100%.
Check out myfavoritecpa.com/training. And then if someone really is looking for an accountant and they think that they would like to scale, call my personal assistant and we'll arrange a conversation.
Like it.
Awesome.
Thank you guys so much for taking the time today. I love this.
Thanks for coming on.
Yeah, it's been fun. I think a lot of people got a lot of information. That was actually way more information than I thought we were going to get into for helping people with tax strategies. Again, another shout out to Warrior CPA for helping us with our numbers. Again, we've used multiple, and from different high-level people, like people that we thought they own over hundreds of units, and they're like, yep, this is our tax account. And I'm like, they got to be great if this person's using them. And they were not at the same caliber that Warrior is. So yeah, another shout out. Thank you guys for everything that you do for us and for all that you've helped us with. We've been able to scale. We tripled what we did last year, and that a lot of that was actually help from you guys to knowing what we're doing and having that certainty, and then also being able to obviously get the financing as well. So
It's process.
yes,
And
100%.
it's papering. It's process and it's papering. That's what it is. That's what it comes down to.
Yep.
Yep.
So yeah, thank you. And thank you guys for watching. If you have any questions or need any help from us, let us know. Of course, our course is always available. And then yes, reach out to Dan for tax accounting. See you guys on the next one. Peace.